Is Intel finally worthy of being added to a dividend growth portfolio? When I'm recommending dividend stocks, I try to find companies paying consistent, stable, and increasing dividends. You should expect annual pay raises in your salary and your dividends. I've been reading a lot of articles about how Intel is dead and how it's a garbage stock, which is why I'm interested. I always try to buy a stock at a discount, especially when I think they have potential to return and gain back that lost share price. Before I get into it, if you're a beginner Canadian investor and you're looking for tips, advice, or starting points, I've created a small ebook to give you some guidance. All you have to do is sign up with your email to get access. Now, Intel has never been on my mind for the dividend. It's always been an options play. I've been investing in their competition, AMD and Nvidia, for years, but mainly because of the increase in their share price, which is very enticing. Intel, on the other hand, hasn't been as lucky. I'm going to break down the positives and negatives. Lately, there have been a lot more negatives about Intel. The main criticism include lack of innovation, strong competition, and losing large clients such as Apple, who started creating their own chips, the M1, to use in their own laptops. Starting with the basic stock information, Intel, which is their take on integrated electronics, which I didn't know about that. Ticker symbol INTC, they're currently trading at 33.36 USD per share. They're currently paying a quarterly dividend with an annual yield of 4.38%. Intel isn't paying a high yield because of dividend increases. It's mainly because of the huge drop in share price recently. Taking a look at the performance in 2022, in the first 8 months, they've lost 37%, which is rough. But remember, we've entered a recession and almost every stock is down. If we compare to their competitors, AMD is down a similar 39% and Nvidia is down 46%. So Intel has fared better this year, but that doesn't tell the whole story. If we look at the last 5 years, AMD is up a whopping 591%, Nvidia is up 281%, whereas Intel is down 5% over the last 5 years. This is what's worrying investors. This is what's killing their stock and even anyone reviewing or remotely interested in the semiconductor industry. They've had a bad 2022 so far. Their results in Q2 were exceptionally bad. Analysts estimated 17.92 billion in revenue, but they missed huge, earning only 15.3 billion. It's also down from 2021 where they earned 19.6 billion. We have to understand everyone reduces their spending in a recession. Every company is going to take a hit, but this feels exceptionally bad considering they had an operating loss for the first time in years. The CEO mentioned this was a one-off, a bad quarter, and it'll pick up near the end of 22 and beyond, so we'll see. I do like how the CEO took responsibility. In the press release, they blamed it partly on the overall economy, which is fine, but also mentioned Q2 results were disappointing, below the standards we have set for the company and below the commitments we have made to you, our shareholders. Then, Q2 also reflected our own execution issues, so I do like how they owned up to it. That's the first step to fixing or making it better in the future, I guess. Those were some of the headwinds Intel was facing, but now look at some of the positives. I think I can talk myself into investing in Intel, but not at $33 per share. As we're only halfway into the year and halfway, I think, into the economic decline, I think the stock still has further to drop. While we can't predict a bottom, we never can. I'm personally setting a target price of $27.50. If Intel hits $27.50 per share, I'd probably load up on 1,000 shares and hold for the long term. I'd be holding to get a decent dividend and hopefully capital appreciation in the next few years. I can't guarantee the stock will come back to its previous all-time high last year of like 65-ish per share, but while you're waiting, might as well earn a decent 4.5 or 5% dividend. The government introduced a $50 billion CHIPS Act where they'll help invest in semiconductor plants being built in the US. The timing is perfect because Intel is planning on building 2 manufacturing plants in the coming years to start making their own chips. Just note, the results from these will be a few years away, so investors have to be patient to see results, which is fine and it's expected. The new plants are part of Intel's new 2.0 plan. The CEO mentioned they're going to spend time and money revamping the company, and he mentioned full execution will take 3 to 4 years, which, to be honest, is a lifetime of waiting on Wall Street. They've recently released their GPUs or graphics cards. The results and performance are underwhelming compared to the peers, but it's promising and it's an additional revenue source. I can imagine they'll only get better. Building these GPUs and building a new plant to become a fabricator and designer of semiconductor will give Intel a huge edge over the competition AMD and Nvidia, who both order their chips from Samsung and TSM. But again, this is a few years away. Okay, this video is running a little longer than I thought. Intel has been paying dividends for 30 years, and they've been increasing their dividends for 8 years straight. The cumulative, I think I got that right, cumulative annual growth rate over the last few years is 5%, which is great. Again, I'll reiterate, I think the stock has room to drop. I would definitely buy some shares if it dips into the 20s. I would hold on for the dividend and might even sell covered calls to earn extra monthly income. That's all for this video. Let me know your thoughts. Is it a buy? Is it a good stock? Even if the price hovers, is 4.5% good enough for your dividend portfolio? That's all, folks.